Bang! I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough problem on how to properly record accrued expenses. So if you're unfamiliar to what accrued expenses are, don't fret, gang. I dropped a link to get you up to speed in no time. So with that being said, let's get it. So a quick recap of accrued expenses before we move on. Accrued expenses by definition are those expenses that have incurred, i.e. happened, but they haven't been paid for yet. So we know what expenses are at this point, gang. We have rent, we have insurance, we have utilities, we also have salaries. And with that being said, sometimes expenses happen, but the company hasn't paid for it yet. Anytime that you have an accrued expense because the company hasn't paid for it yet, creates a liability. So the proper adjustment for all accrued expenses requires a debit to an expense and a credit to a payable. So let's take a look at the problem. It tells us that Birch Company Senior blah 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 has a weekly payroll of $12,500. December 31st falls on a Wednesday, and the company will pay its employees the following Monday, January 5th, for the previous full week. Assume that the center has a 5-day work week and an unadjusted balance of salary expense of $620,000. That's a lot of information, gang. So let's recap. The weekly payroll for this particular company is $12,500, but the company makes the payments the following Monday for that particular previous week. And so December 31st falls on a Wednesday, the end of the year. And the company expects to make that payment for the previous week, i.e. Monday through Wednesday, the following year on that Monday that falls on January 5th. And so what we have to do is record the year-end accrued expense. Now, how do we know we're dealing with accrued expenses, gang? It's easy. Salary is an expense. So in this situation, the expenses happen at the end of the year, but the company hasn't paid it. And so this must be accounted for properly. So it tells us to record the adjusted entry of accrued salaries on December 31st. All right, so because we know that the expenses happened already, we're going to increase that expense. We're going to debit salary expense. And because by definition, the company hasn't paid for this expense, we're going to credit salaries payable. Remember, gang, any payable is a liability, and if it's a liability, it's in the clear, gang. And then all accounts that's in the clear, gang, will increase on the credit side. Now, here's where the trick comes in, gang. We have to calculate the correct amount. Now, how are we going to do this? $12,500 represents a full week of salaries that the company pays for their employees. And it's a 5-day work week, meaning that from Monday through Friday, that amount equates to $12,500. And the company makes those payments to the employees for that particular week the following upcoming Monday. So December 31st is time to make the financial statements, but we have some expenses that needs to be on the books as well as liabilities. We've already recorded those, but we need the proper amount. So how much expenses for the period has incurred, happened, but hasn't been paid yet? Well, since December 31st is a Wednesday, we have Monday, Tuesday, and Wednesday, 3 days of salaries that the company owes their employees. 3 days of expenses that actually happened Monday through Wednesday. And so we must record that properly. So what we're going to do is take the $12,500, which is the total work week, multiply it times the 3 days that the expenses incurred, then divide them by the total work week, which is 5. So 12,500 times 3 divided by 5 should give us 7,500, gang. So we're going to go ahead and put the 7,500 in there. And of course, the explanation would be to accrue salary expense. We're going to check the answer, money all day. So we're going to move on, and it now tells us to post the adjustment of those accounts with the post reference, then calculate the ending balance for each particular account. Okay, gang, that's easy. So as we already know, we had a previous unadjusted balance in salaries expense for $620,000, but we just increased our salary expense by an additional $7,500. So we're going to post that transaction with a debit to salary expense of $7,500. And of course, we are also going to increase our salaries payable by the $7,500 as well. They want us to calculate our ending balances, and that's simple. We're going to just carry over that $7,500 for our payable, and we're going to add the $7,500 to the $620,000 to give us an ending balance for our new salaries expense amount, which is $627,500, gang. So check the answer, money all day. And last but not least, it tells us to record the entry for payment made on January 5th, the following pay period. So, a couple of things you have to laser in on, gang. We are now making that actual payment for that previous work week. Remember, the work week consists of an entire 5 days. However, of those 5 days, 3 of them was accrued in the previous period. So there's a couple of adjustments that need to be made for this payment, right? But we know we're paying cash, right? So we can easily reverse engineer this journal entry by crediting cash, right? So let's do that. Let's credit cash, right? We're going to credit cash, and we know that the cash amount is a total of $12,500. We already know that, gang. So we're going to go ahead and put the $12,500 in there, right? We also know that there are a few accounts that must come off the books, right? Some liability accounts, right? We have a previous salaries payable for the accrued expense from the previous year, $7,500, that is now being paid for. So that particular salary payable needs to come off the books. So we're going to debit salaries payable for the $7,500. We also, gang, have 2 days, Thursday and Friday, from this particular period of salaries that happen, which consists of our total 5-day work week. Remember, gang, we recorded 3 days of the work week last year. We have 2 days left to record. And since those are salaries, we must record the expense for those 2 days. So we're going to debit salary expense for those 2 days. And how will we calculate that? Easy, gang. 12,500 times 2 divided by 5. And that should give us $5,000. So in all actuality, we debit salaries payable for $7,500. We also debit salaries expense for $5,000, and we credit cash for $12,500. And our explanation for that would be to make the payment of the salaries. So we're going to check the answer, money all day. So there you have it, gang. A beautiful illustration of how to properly accrue expenses and make the follow-up payment for salaries. So if that light bulb clicked and you're getting closer to chasing that bag, like, subscribe, and share the channel with your friends so they can chase that bag too, gang. I'm Dr. Who, and it's always my pleasure, and I look forward to seeing you soon. Bags!